Welcome to today's webinar, which will provide vital insight for owners of media agencies on global M&A trends. I'm Sophie Lewis, Marketing Executive at Equitech, and today Ramon Param, Associate Director from our Market Intelligence and Buyer Coverage team, will be presenting. Ramon's going to be presenting for about 20 minutes, followed by a Q&A session. If you've got any questions, you can use the control panel on the right-hand side of your screen, and you'll find the questions box towards the bottom. So over to you, Ramon.
Thanks, Sophie. So my name is Ramon Param. So I'm an Associate Director, as Sophie mentioned, in the Market Intelligence and Buyer Coverage team at Equitech's New York office. Before joining Equitech, I worked with Macquarie Group's corporate finance business, and was also a founding member of PwC's global corporate development team, focused on advising the professional services network globally on consulting M&A. Now, the Media Agency M&A report is part of a series of 5 segmental analyses that we undertake covering management consulting, IT services, media agencies, engineering, and human resources. And this year marks our 10th anniversary of this report. Now, the Media Agency M&A report is a focused review on M&A and equity market trends related to firms working across all major disciplines of advertising and marketing. So the webinar will look at the report, discussing an overview of M&A activity, typical deal sizes, regional variations, equity market developments, valuations and buyer trends, before wrapping up for some Q&A. So with that brief introduction, let's jump in and take a look at the findings from the report. So this year was an excellent year for M&A in the industry. So deal volumes fell by 2%, but 2016 was the strongest year, only second to a very strong 2015 for deal flow in the industry. Median deal sizes and average deal sizes, as we can see, rose substantially, and that was supported by mega deals like the acquisitions of Merkle by Dentsu and the acquisition of JD Power by XIO Group. Now, it should be noted that this strong M&A activity in the industry was against a backdrop of slow global economic growth, and of course against a backdrop of a year of substantial political volatility with the UK's vote to Brexit and the US presidential elections. Notwithstanding that, deal flow was strong and particularly robust in areas like digital marketing and customer analytics. So I mentioned Dentsu's acquisition of Merkle as a big deal in the year. Now, Merkle's considered to be the largest independent US-based agency focused on CRM, and it manages a vast data set of first-party customer records. So a good example of a major deal encompassing both of those hot specialisms. Within digital, another hot space is mobility. Now, with the increasing use of mobile apps by customers, and as IoT proliferates their uses amongst various devices, this is becoming a very hot area for media agencies to specialize in. And that was evident by a lot of the deal activity from the large global marketing networks, with deals by WPP and IPG in the space, and also amongst IT services firms. Accenture made a notable deal of a European leading mobile consulting business called Mobgen. Now, deal flow was also marked by converging buyer demands. So on this slide to the left, we have a table which outlines a matrix. So along the top, we have each of our 5 consulting segments across the knowledge-intensive services sector. So those are all the 5 segments that we cover across that broader industry. And along the left are rows indicating how the targets that those buyers are acquiring fall into each of those 5 industries. And the shading on the table really indicates where proportionately those buyer groups are acquiring outside of their core sector. So darker red really suggests high cross-border M&A activity. And we can see related to media agencies, there is notable activity at that intersection of strategy, media, and also IT. Now, this has been a trend that has been notable for a few years, but it is becoming more prevalent. And in 2016, it was acknowledged by some high-profile commentary from the likes of Martin Sorrell at WPP and also Michael Roth at IPG, who both acknowledged that their competitors now also include the likes of Accenture, Deloitte and IBM, as well as Salesforce. And that was evident by some of the converging acquisition patterns amongst these names. Now, it's also worth noting on this slide that in addition to that converging buyer demand at that intersection of IT, consulting, and media, there was also notable activity from publishers buying into the space. In 2016, we saw deal activity from the likes of the New York Times, the Financial Times, and The Economist, all acquiring into the media agency space, acquiring businesses with specialisms in areas like social media and branded content. So overall message here is a lot of convergence in this industry. And as an owner of a media agency, considering those non-traditional strategic buyers in any sale process that you're considering will be important for maximizing equity value. Moving on to average transaction sizes, they rose substantially in the industry to just over $80 million. Now that was driven by some of those milestone deals that we discussed earlier, Merkle and JD Power. Nevertheless, median deal sizes were a lot smaller. They were around $14 million. And as we can see from this chart, around 40% of all deals are below $10 million in value. And there's also a substantial amount of deal activity between $10 million and $500 million. Now, what we typically see is that below $10 million, most transactions are typically consolidated through small team grabs or mergers that typically involve limited cash consideration. So what we typically find is the hot area for deal activity, with cash being a major component of transaction, is normally between $10 and $500 million. Now, we also took a look at regional trends, and as we can see from this graphic, deal activity was focused on North America and Europe, accounting for around about 80% of all transactions in this industry. That was followed by APAC, which in total accounted for 15% of all deals. In North America, deal volumes were broadly flat. That was despite some slow activity in the quarter preceding the US presidential election. But it was followed by a sharp recovery in deal volumes in the final quarter, just after the election result was announced. Now, despite the political volatility in Europe, deal volumes rose across Europe in the media agency space, and there was particularly strong growth in the UK. In Asia Pacific, deal volumes were down, but there was notable activity in Singapore, which really bucked the trend for the rest of Asia and Australasia. Looking at deal volumes from a more global cross-border perspective, cross-border activity accounted for 26% of all deals in the year, and that was down from 31% in 2015. Nevertheless, that is still a substantial proportion of deal activity which is cross-border in nature. And for an owner of a media agency, it really highlights the importance of incorporating a global universe of buyers when you're looking for the right buyer group for your business as you're considering a sale process. Now, flipping over to the next slide, we also had a look at equity market trends through our proprietary index, the Equitech Media Agency Share Price Index. Now, that rose by 6% in the year, and it underperformed the S&P, which rose by 11%, but still was pretty robust overall. What we found is that amongst players that were listed in the industry, there was very mixed performance. So there was notable share price rises from the likes of WPP, Omnicom, and Ipsos, who really bucked the trend and rose a lot more higher than the broader index and even the S&P. Now, considering pricing and valuations, as we can see from this chart, they have been relatively volatile over the last few years, and there's large variations in valuations in this industry depending on where you are, with larger premium valuation multiples being attributed to those cutting-edge media capabilities in the digital space. On average in 2016, the average last full year revenue multiple for a deal was 1.8 times, and the average last full year EBITDA multiple was 11.4 times. So in the context of the broader knowledge intensive services industry, this is a very premium end of the market where there are much higher metrics being paid in comparison to other sectors that we're covering. It should be noted, though, that, as I mentioned, there are large variations in these multiples, and they also are reported transactions that we gather from our publicly available data sources and also our subscription data. So, this is reported historic metrics, and with respect to EBITDA, they're unadjusted profits that we're looking at. So just a word of caution there before trying to apply these metrics to valuing your own business. Now, when we compare these metrics with the multiples of listed media players, we find that listed media players have experienced rising and pretty stable multiples over the last few years, but at a slight discount to the metrics that are being paid on transactions in the industry. So in 2016, the last full year revenue multiple for a listed media player was 0.8 times, and the listed EBITDA multiple was 9 times. So, that's relatively strong metrics for a listed player that's operating in the industry, and those have also been rising over the last year. And if we combine that with the rising unused cash balances that we're also seeing amongst many of these listed players, and this demand amongst many of them to search for new avenues of growth to sustain a lot of the share price rises that they're experiencing. This in combination is really creating a very acquisitive and competitive buyer group in the industry. And when we move over to looking at the top buyers in the sector, we can see that a lot of those buyers are those listed players like Dentsu and Publicis. Now, when we consider serial buyers in the sector, we typically define that as being those buyers that have made multiple acquisitions over the last few years. And those serial buyers accounted for 37% of all transactions in the industry. That was broadly in line with 2015, and it accounts for a substantial amount of deal flow in the sector. Now, of those serial buyers, Dentsu was the most acquisitive, and it really stepped up the rate of its acquisitions this year, outperforming WPP, which was the most acquisitive buyer in 2015. Now, we mentioned Merkle as being a big deal that Dentsu undertook in 2016, but in total it acquired 25 digital media agencies of various sizes and of various different specialisms within the industry. Now, Dentsu's really been aggressively acquiring mainly through Dentsu Aegis Network, which is its international arm. And that's really as part of a drive to reduce its dependence from revenue generated in its sluggish home market of Japan. Another notable acquirer to mention is Publicis, which was the third most active acquirer after Dentsu and WPP. Now, it significantly slowed down its acquisition activity in 2016, largely from the loss of some major client accounts, notably being Procter & Gamble and Walmart. It also ended talks midway through the year with Samsung over a possible investment in Shield Worldwide. So that in combination really resulted in a slowdown in M&A from this prolific buyer in the industry. But it has undergone a major reorganization over the last 12 months, which we expect to pave the way for a renewed focus on M&A over the next year or so. Now, although the Big Four aren't typically acquisitive in the media space in comparison to other segments that we follow, like management consulting and IT services, they are increasingly growing their capabilities in the area. And that was notable by Deloitte's acquisition of Heat and PwC's acquisition of Strategicom. So the Big Four, we are increasingly seeing, growing and expanding either organically or via M&A into the media agency space. BDO and Grant Thornton have been less acquisitive in the area, but as we can see from this chart, which has a look at their acquisition activity broadly across the consulting industry, they are now catching up, especially BDO is becoming a lot more acquisitive, really trying to catch up with the Big Four in terms of its building of non-assurance capabilities. So we'd expect, over the next year or so, it wouldn't be unexpected for the likes of BDO and even Grant Thornton to start acquiring into the space. Now, private equity are strong investors in the industry, and for an owner of a media agency, they can be a flexible solution to either fully exit your business or achieve a partial value realization, which gives you other options as opposed to just selling outright to a strategic buyer. In 2016, in the media agency space, they accounted for just over 4% of all deals, which is a little lower than other services sectors that we cover. But it still is a notable proportion of all deals in the industry. And that is despite some of that competitive pressure that they'll be facing from the aggressive strategic listed buyers that we discussed earlier. Now, this chart has a look at private equity involvement in the broader knowledge-intensive services sector. And this is a pretty relevant chart to all the industries that we cover, including media agencies. Now, what we find is typically private equity involvement rises as we're looking at larger transactions. And as we can see here, for deals above $10 million in size, the proportion of private equity involvement rises substantially. And that was evident in the industry, and especially at those larger deal sizes from acquisitions like Advent's takeover of Ansera. So wrapping up and in conclusion, deal flow in 2016 was strong, and we're seeing a lot of that positive sentiment carry into 2017. There was a continued shift amongst customers and buyers from legacy to digital capabilities, and we're expecting that to continue in 2017 and really underpin a lot of strong deal flow from buyers across industries. So from the perspective of a sale-ready business, there's plenty of options out there if you're considering a sale. So that concludes our presentation for today. And with that, I'll hand back to Sophie for some Q&A.
Thanks for that, Ramon. So we've had some questions come through. I think I'll start with this one. So I specialize in mobile apps. If I wanted to sell to a buyer who isn't in my space, how do you go about assessing what group or buyer would be relevant?
Great. Okay. Thanks for that. So I think, first point is, this business in question, working in mobile apps, they're working in a very hot space. So, I'm going to expect that, before digging into, what their financials are or sizes or business model, there is going to be a lot of demand just for their capabilities from a lot of buyers from different industries. Now, I think, assessing, what are the right buyers to be going out to, in their sector or outside, is really a consideration around the synergies that can be generated from the perspective of different buyers. So, I think relevant for a business that is specializing in developing mobile apps will be, having a look at some of those full service digital agencies that, may have a gap in mobile apps. It's a hot area that they'll need to be building in. And for those, there'll be a lot of synergies from acquiring, a company like this. And that might not even just be domestic competitors that they're coming up against. It might also be, a foreign buyer that is a, full service digital agency that is looking to get that US foothold, and may see a lot of synergies from acquiring a business like this. I think also just another point to note on that is also having a think about, who are the players that this business is coming up with in terms of partnering on broader digital transformation projects. So, where are they developing mobile apps as part of a broader digital transformation of a business? Are they working with strategy consultants? Are they working with other IT consultants? Having a think of those players, and having a think about how they might generate synergies from providing a bit more of a one-stop shop from acquiring a company that is specialized like this.
Okay, so next question's about private equity. Do you have any sort of advice on positioning a company for a PE investor? How would you go? What would you say?
Yep. So, with respect to private equity buyers, we've received a lot of feedback, over the last few years, and a lot of that was reflected in our buy report that we published at the end of last year. And I think, consistently amongst the private equity buyer community, there are a few things that stand out. So I think first thing to mention is client base. So, a lot of private equity buyers are looking for, companies that work with good clients, have long-standing relationships, and ideally have revenue that's diversified across a number of buyers, to reduce that risk of, dependencies on key client contracts. I think the other bit to mention is, private equity really do have a focus on intellectual property, and that can be, software, tools, methodologies, but also in the media space, a lot of private equity buyers like to see thought leadership and publications that really, differentiate a media agency and say that it's at the forefront of a lot of the changes that are occurring in the industry. So, I think, client base, IP, that in combination with, good margins and growth are going to be really important from a private equity perspective.
Okay, thanks for that. So next question's more around location. He's written, I'm based in Denmark. Does this limit my choice of buyers?
Yep. So, I think, we often work with, companies across the space that aren't necessarily based in, some of these hubs for, advertising or consulting, like New York or London. I think, when we're working with clients like that, that might not be, based in areas that are, big focus for global media firms or global buyers, then we do have to be a little bit more inventive on who the buyer groups are. So it might be considering, who are the regional players that, for example, in this example, work in Scandinavia or Europe, and, might be trying to get that foothold in Denmark. And, thinking inventively about buyers like that, which are more focused on, that region of the world. But I think, it is worth saying that that doesn't limit your opportunities to go out to global firms as well. And, I think there's a lot of examples of where we've run processes for businesses, based in countries like this, where we've got a lot of global buyers who have actually expressed interest in companies like that, where they've maybe exhausted some of their options in more developed markets in the world. And that, if you go through the media agency reports, in the back, we've got a collection of a lot of the major deals that occurred over 2016, and examples like Accenture's acquisition of D Group, and Merkel's acquisition of a business, I think, in Spain, really highlights that point.
Okay, so next questions around deal structure and earnouts. So what sort of deal structure are you seeing, and what sort of earnout could you expect if you sold?
Yep. So we did quite a lot of work, broadly across the industry on what the deal structures are looking like. What we found is that they do vary widely, depending on the transaction. The average deal across the industry saw just under 60% of consideration paid up front, and the remainder of that was an earnout structured over 2 to 3 years. Now, what we typically see is that that earnout in the media agency space can be a little bigger, and that can be used to justify some of the bigger valuation metrics that are getting paid for disruptive businesses in the space. And what we find is typically those earnouts, they will be linked to elements like gross margin that are quite measurable even after an integration of a business. The other thing I think is worth mentioning is that you can form sort of expectations on what a typical deal structure should be and what the deal structure is that you're expecting. I think this is one area that negotiation can be really important in. Typically what we see amongst buyers is that they are less likely to negotiate around valuation as quickly as they would negotiate around deal structure. That's an area where we do see upfront valuation, upfront consideration, increase markedly during a process, as you're getting that competitive tension, as you're negotiating with the buyer, and even reducing some of that earnout component and transferring it to some sort of fixed deferred cash component instead. I think there is a lot of variation, and there's also a lot of opportunity there to negotiate better terms.
Okay, I think we've got time for one more question. So this one's, if I'm not in a hot area, you mentioned, can I still find a buyer?
Yep, that's a good question. So we talked a lot about those specialisms, like customer analytics and mobility being really hot in 2016. And I think those are the areas that you're going to see a lot of the premium metrics being paid, and a lot of buyer demand for areas like that. But I would say that for an agency that is also operating in maybe a less digital dependent area like product design, for example, and they have a unique capability. They're working with strong clients. They've developed some unique methodologies and approaches to their offering. Then regardless of whether you're in that hot area or not, you're going to experience a lot of demand for your business. It might not be at the metrics of a cutting edge digital media business, but there still will be demand out there.
Okay, thanks for that, Ramon. So for those of you who posed a question which we haven't had time to get to, Ramon's going to get back to you after the event. Also, if you're interested in talking to us at all about preparing to sell or selling your business, then you can contact me at sophie.lewis@equitech.com. I also just want to remind all of you that most of you probably are, but if you're not already a member, then please do join our Equitech Edge Club. It's a free source of information for consulting firm owners. You'll find expert guidance, unique research, guest articles, a monthly newsletter, all to help you grow equity value in your business. I just want to say thanks to Ramon for presenting today, and thanks to everyone for attending. You'll be emailed a copy of the recording within 24 hours. So thanks, Ramon.
Thank you.